Hello, good morning, and welcome to another exciting time to talk about business. It is Business 360, and my name is Blyden Ukem. In Business 360 today, we'll look at some of the biggest talking points around the markets. We'll also look at Nigeria's perspective and the battle between Uganda and Kenya regarding crude oil. But we'll begin with the U.S. President Joe Biden. The U.S. President Joe Biden has said there's no possibility of a formal ceasefire by Israel, but they do agree to 4-hour daily pauses. Israel has agreed to put in place 4-hour daily humanitarian pauses in its assault on Hamas in northern Gaza starting on Thursday, the White House said. In Africa, Uganda-Kenya oil saga continues as Kenya refuses Uganda access to its oil pipelines. In September, Uganda's bid to utilize Kenya's pipeline for fuel transportation was denied because it would displace local oil marketers' businesses from utilizing the pipes, according to reports. This is the latest in a series of events leading to the likely termination of Uganda and Kenya's oil partnership. Kenya and Uganda have been at odds with each other for the past few weeks over the future of their energy sectors. Uganda recently disclosed that it would end its dependence on Kenya for its oil importation. The country instead opted to go with another East African country, Tanzania. Additionally, the Ugandan national oil business, UNOC, a state-owned oil business, and Vito Bahrain, EC, an energy firm, reached a deal under which Vito Bahrain would pay Uganda National Oil's efforts to acquire and supply oil. Still in Africa, about 870 jobs are expected to be lost once Base Titanium, a mine located in the Kenyan town of Kwale, leaves the country next year. Base Titanium's impending exit could result in the loss of 870 local jobs. Kenya is set to lose billions in annual tax and its revenue and royalties. The Australian company, Base Resources, cites insufficient titanium and resources for their closure. Now still looking at state of things in Kenya. President William Ruto has announced that Kenya will repay $300 million of its 2 billion Eurobond, a $2 billion Eurobond, in December, ahead of its June maturity date. The decision comes after Kenya explored funding options, including seeking support from multilateral lenders such as the IMF and World Bank. As of June 2023, Kenya's public debt stood at 64.4% of gross domestic product in present value terms, exceeding the stipulated ceiling of 60% as reported by the National Treasury. Now to Uganda. The Deputy Governor of Uganda's Central Bank, Michael Atingi Ego, has stated on Thursday that Uganda has made significant progress in negotiation with the World Bank about its anti-gay legislation. Due to this, the World Bank stopped making any new loans to the nation in August, as certain same-sex actions are punishable by death. The Deputy Governor of the country's Central Bank admitted that the World Bank statement had caused the nation's currency to drop sharply, albeit it eventually rebounded. It added that the administration has been in communication with the World Bank to gain some insights into its concerns. To South Africa. Fourth South African Division has announced its plan to invest 5.2 billion rand, an equivalent of $281 million, in manufacturing a hybrid vehicle within the country. The company has also called on the government to expedite the implementation of an electric vehicle policy. Ford said the investment would go into producing its Ranger plug-in hybrid electric vehicle, which will be rolled out from its factory in Pretoria in late 2024. In Malawi, Malawi's central bank has issued a notice to authorized dealers bank, informing them of a 30% reduction in the local kwacha, the currency in the country, and its exchange rate against the dollar, effective from Thursday. Malawi's recent decision to devalue its currency marks the second time the Southern African nation has taken this step. It cited ongoing supply-demand imbalances in the currency market and the re-emergence of arbitrage opportunities as the rationale behind the current exchange rate adjustment in the country. The notice outlined that a new exchange rate for the kwacha would be 1,700 kwacha to the dollar, a significant shift from the previous selling rates of 1,180 kwacha to the dollar. Now back home in Nigeria. The value of pension funds has declined by 45.18% when valued in dollars following the devaluation of the naira. According to data obtained from the National Pension Commission's website, the net asset value of pension funds stood at 17.35 trillion naira as of September, amounting to $19.83 billion when dollarized, using the official exchange rate of $874.71 naira per dollar on Wednesday. However, before the devaluation of the naira in mid-June, when the Central Bank of Nigeria tried to unify the country's exchange rates, the pension funds were valued at 16.76 trillion naira in June and worth $36.17 billion in dollar terms, using the exchange of 463.38 naira per dollar on June 9th. The value of the pension funds has also been eroded by the accelerating inflation in the country, which stood at 22.79% in June, but has soared to 26.72% in September. Still in Nigeria. China's declining growth is set to affect Nigeria's economic fortune, according to the International Monetary Fund (IMF). The IMF noted that because China has forged deep economic ties with countries in sub-Saharan Africa over the past 20 years, its recent declining growth may affect growth in Nigeria by 0.5% points on average. And China is the region's largest single-country trading partner, and as it buys 1/5 of the region's exports, its metals, minerals, and fuel, and provides most of the manufactured goods and machinery imported in the region. It, however, noted that China's recovery from the pandemic is now set to ripple and have a ripple effects across Africa. Meanwhile, the federal government recently agreed wage with the Labour Congress, and salaries to federal workers and other non-date recurring costs are expected to gulp the 7.76 trillion naira in 2023. This is based on data from the initial 2023 budget and recently signed 2023 supplementary budgets. A 2.18 trillion naira budget was approved to augment new expenses, including an agreed wage reward for workers due to the removal of fuel subsidy. When the budget was announced, the Minister of Budget and Economic Planning, Abubakar Bagudu, noted that 650 billion naira has been earmarked for national defense, while 210 billion naira will cover the payments of wage awards. In Nigeria still. Nigeria Liquefied Natural Gas (NLNG) Limited has pointed to vessel scarcity, fluctuations in foreign exchange rates, and soaring oil prices as the primary causes for the recent surge in cooking gas prices. Market survey carried out revealed that as of the beginning of the month, the price of 20 metric tons of cooking gas at the terminals was 10 million naira. However, as of October 20th, the price had risen to 14 million naira per 20 metric tons. In an official statement released on Wednesday, NLNG explained how these factors, in conjunction with domestic macroeconomic development and global influences, have led to the constriction in the supply of liquefied petroleum gas within the domestic market in the country. We'll go on a quick break. When we return, Business 360 continues with economics.
One of the highest benefits of being this dual modality vehicle to get out of the way. And when you're trying to evade an adversary or get out of the way of surface energy, being able to dive is tantamount to success and survivability. A Triton is basically the cost of a Tomahawk missile, but what I would say there, it's the right sweet spot. I think the future, the next 12, 24, 36 months, is going to look like smarter Tritons. Where we want to get to is interconnectivity on a swarm basis, using all these Tritons together.
The leader of the Communist Party of China has said he wants his country to be ready by 2027 to retake Taiwan.
One of the highest benefits.
Welcome back. It is Business 360. My name is Blyden Kim. And now looking at global economic standings around the world and also looking at the markets. Meanwhile, according to Wall Street Journal report, the SEAL submarine, the sailboat drone the U.S. Navy is using near Iran, it's been under check and details was what you saw earlier on. And now let's move to the United States of America and talk about monetary policy as it's working, as it should be according to the Federal Reserve's chairman, Mr. Powell. Federal Reserve Chair Jerome Powell says monetary policy is working as it should be, and he thinks some households and businesses aren't feeling the impact of higher interest rates in the United States. He spoke at an International Monetary Fund conference in Washington. Let's find out more.
I think monetary policy is generally working in the ways that we think it should work, which is interest-sensitive spending, asset prices, exchange rate. I think there are some aspects of the U.S. economy where you can argue that it's a little different, and that would be, for example, households who are in low-rate mortgages are not selling their homes, but they're also not feeling the effects of higher rates because they really don't want to get out of those mortgages. Same thing with companies. Any company that had access to fixed-rate borrowing and didn't use that in the last 3 or 4 years would be facing, but there are very few companies that are in that. So it may be that the U.S. economy is structurally a little bit more resilient to interest rates, but I don't think that I don't see at this point anything that seems to be structurally or materially.
Well, inflation is not biting that much in the U.S. compared to the rest of the world, especially Africa, but it makes for good reading in that direction according to Powell. Let's move to China. China's economic woes deepened in October as consumer and producer inflation contracted amid weak retail spending and a worsening slump in the manufacturing sector. Meanwhile, Cotswold says the CEO of Proper Trading has more on this.
In October, that was in line with expectations, but worse than the 0% reading last seen in September. Despite continued stimulus measures from Beijing and pent-up demand, overall spending did not improve, despite the Golden Week holiday in the first week of October. PPI inflation also shrank. That was at a 2.6% clip in October, slightly better than expectations for a drop of 2.8%. PPI has now shrunk for 13 consecutive months. Chinese consumer sentiment has worsened substantially this year, keeping retail spending and CPI inflation under pressure. October was also the second time that both CPI and PPI inflation shrank this year.
The Reserve Bank of Australia expects inflation in the country to return to the top of its 2 to 3% goal by the end of 2025 as cost pressure is easing more slowly than previously thought due to the persistent services inflation, the central bank said in its quarterly monetary policy statement. During the November meeting, the board raised cash rates by 25 basis points to a 12-year high of 4.35% after maintaining in its prior to 4 months following a total hike of 425 basis points since May 2022. The committee noted that the economy had proved more resilient than expected, owing to strong government spending on infrastructure and robust migration. GDP growth now is expected to expand by 1.5% year-on-year in the fourth quarter of 2023, stronger than August projection of 1.1%. The unemployment rate currently is near its lowest since the 1950s at 3.6%, according to reports coming in from Australia. It would be a good time to look at the commodity markets and what the prices are, beginning with oil, as crude oil heads for a third weekly decline. WTI crude futures steadied above $75 per barrel this morning, but were still set to decline for the third straight week, as easing concerns over potential supply disruptions in the Middle East and demand uncertainties in the US and China weighed on the market. The Energy Information Administration said that the total petroleum consumption in the US is expected to decrease by 300,000 barrels per day this year, a reversal from its previous forecast for a 100,000 barrels increase per day. Latest data also showed that US crude inventories surged by nearly 12 million barrels last week, the largest increase since early 2023. In China, weaker than expected inflation and trade figures hurt the demand outlook in the world's top crude importer. Elsewhere, fears that major central banks could raise interest rates further also weighed on the global demand outlook, with the US and European policymakers stressing the need to bring down inflation. Let's move to the market quickly and see what the prices are for these commodities, the energy market first, and afterwards the metal, as well as agricultural commodities. The energy market. The energy market this morning have shown different outlook, mixed fortune, but mostly on the positive. $76 per barrel is the price of crude oil, the US crude, upward by 0.278 points, a 0.38% appreciation. For Brent, which is Nigeria's price benchmark, $80 per barrel. Natural gas has no significant difference in the market. Gasoline price is slightly upward, 0.87%, heating oil slightly upward, and coal price slightly upward. Now to the metals. The price of gold is downward this morning by 3.68 points, $1,954 per ounce is the price, a negative 0.2% decline. Silver price similarly downward, a negative 0.16% drop. A copper price downward to negative 0.92% drop, but steel price gaining this morning by 3,876 Chinese yuan per ton is the price of steel. Iron ore, no significant difference in the market, and lithium, same story. Let's look at the price for agricultural commodities. Agricultural commodities indicates the price of soybeans on the downward pedestal, dropping 2.5 points, a negative 0.19% decline. $1,325 per bushel is the price of soybeans. A wheat price is at $580 per bushel. Lumber slightly upward this morning by 10 points, palm oil gaining 60 points, a 1.6% appreciation. 3,803 Malaysian ringgit per ton is the price of palm oil. And the story around the commodity markets this morning. And quickly to the foreign exchange market. Looking at crypto insights, the question is, what is behind Bitcoin's rally? In 2023, Bitcoin's dominance within the crypto space has risen from 40% to a current level of 53%. What factors are keeping the digital assets elevated? Let's have insights by Jim Laurier. Jim Laurier.
One of the biggest market stories in 2023 has been the eye-popping 115% rally of Bitcoin amid a glut of positive headlines. Of course, the biggest part of the story has been the growth of huge established institutions like BlackRock expanding their exposure into the space. Now, even in the last week, more headlines emerged as a team of ex-Cantor Fitzgerald executives announced plans to launch a crypto lending platform called Tokenet in anticipation of an influx of capital into the space following the potential approval of the first U.S. Bitcoin ETF. Now, Bitcoin's dominance within the space has risen in 2023, having started at 40% to begin the year to a current level of 53%. The technical picture of Bitcoin is interesting as well, having spent the last 2 weeks in a really tight range near the 35,000 level, which is directly below major resistance at 36,000. Now, that 36,000 level had established itself as a level of importance in early 2022, having bounced off it several times before giving way to further losses. Now, a reminder that CME Group offers options on both micro Bitcoin and micro Ether futures. We're going to be using the micro.
Well, that's it from a cryptocurrency market. And Jim Laurier, let's get to the market itself and see what the prices are this morning for Bitcoin and other cryptos. The market. A Bitcoin price is downward now at 38 points, a negative 0.14% drop. Market is moving quite fast at 36,400. It's the price of Bitcoin. $36,491 US, market quite fast. Ether price $2,097, upward by 38 points and 1.85% appreciation. Binance upward by 9.7 points. Cardano a little here, a little there. Solana also upward by 1.88 points, but Ripple slightly downward. Let's look at the euro against the US dollar, the majors in the currency market, and afterwards we'll also look at Nigeria's currency. The euro against the US dollar, a slight momentum upward, but still at the 1.06 point mark. The pound against the US dollar still standing at 1.22 point mark, a slight decline this morning. Naira's perspective in the market. The majors against the Naira. Let's look at the details in that one. What the change in the price for Naira is in the market. While expecting the concepts in Naira's perspective in the market, let's also look at the black market, what the indices are in the black market. Buying rates 1,130 and Naira equals $1, and selling rates 1,090 Naira. Pounds to Naira perspective, 1,305 Naira equals to £1, and selling rate 1,240 Naira. The euro to Naira 1,170 Naira, equaling €1 at the buying rate, and selling rate 1,210 Naira. Now to the equity markets, beginning with the Asian stock market. Asian equity market fell today, tracking losses on Wall Street overnight, driven by rising treasury yield and hawkish remarks from the Federal Reserve Chair Jerome Powell. The central bank chief said that the Fed is not confident monetary setting are sufficiently restrictive to sustainably achieve the 2% inflation target. Shares in Australia, Japan, South Korea, Hong Kong, and mainland China all declined this morning. And quickly, let's look at the Asian stock market, and afterwards we'll also look at the company stocks. The Asian stock market this morning. Well, it's been a huge decline as reported, 164-point downward movement for the Japanese stocks at an index level of 32,482. While in China, the Shanghai stocks is downward, CSI 300 also downward, the Shanghai 50 falling 22 points, and CH50 also downward 96 points this morning. Sensex is downward 38 points. And it's a huge struggle for the Asian stock market. Let's also look at the company stocks, the value of Apple and the rest of the companies, Tesla, Microsoft, Amazon this morning. A huge negativity, but the volatility level quite low. For Apple price at $182 per share, downward 0.48 points, a negative 0.26% decline. Microsoft also downward by 2.51 points. Amazon downward this morning 1.48 points. Meta, which consists of Facebook, Instagram, and the rest of the companies on that, upward 0.77 points, and Nvidia also upward 3.76 points. Even Visa is downward this morning. From a Nigerian point of view, an African point of view, a firm, Indian Continent Investment Limited, has increased its stake in Airtel Africa through the acquisition of £57.25 million worth of shares. In a corporate notice filed with the Nigerian Exchange Limited on Thursday, Indian Continent Investment Limited, based in Mauritius, bought 55,500,000 units of Airtel Africa at £1.07 per unit. According to the notice, Indian Continent Investment Limited is affiliated with Shravin Bharti Mittal, the managing director of Bharti Global Limited, Bharti formerly investment arm, and Bharti Airtel is the largest shareholder of Airtel Africa. It was indicated that the deal took place on Monday on a London Stock Exchange, where Airtel Africa shares are also listed. Here we draw the curtain on today's edition of Business 360. Thank you for being a part of it. My name is Blyden Ukem.